Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
The world's rich and powerful are descending on Davos for the World Economic Forum's annual meeting. The lingering effects of pandemic, the rising inflation in many parts of the world, and Russia's war in Ukraine have created a bleak backdrop. Amid all this, global investors will be keenly assessing what the Indian delegation has to say at Davos. So, what will be India's strategy and what challenges it could face? Let's answer these questions.
The effects of the Russia-Ukraine conflict are being felt at the World Economic Forum's annual meeting in Davos. The political and business leaders of the world are anxious about Europe's economic future. Meanwhile, energy shortages and the spectre of economic recession have created a sense of gloom among many business leaders. Other investment destinations are also looking uncertain, but India has emerged as a region of both economic dynamism and political stability. Keen to capitalize on this prevailing mood, India is drawing the attention of global leaders to its reformist decisions and the fast pace at which new unicorns are being minted in the country. Global investors are also keenly assessing what the Indian delegation is bringing to the table at Davos. Taking place after a 2-year pandemic-led hiatus, the ongoing World Economic Forum meeting is now looking at a different world than the last one was. And that's a reason for India to find itself in a sweet spot.
If we look at the Davos summit 2 years ago, the focus was very much on Xi Jinping, the Chinese leader. The fact that he presented himself as a champion of free trade, of a liberal economic order, while Trump's America was in fact on the other side of the fence, as it were. Today, China is not present at Davos. China is, in fact, in a somewhat more defensive mode. So this is by default, naturally, the focus will shift on the next largest emerging economy, which is India. And there is no doubt that, relatively speaking, compared to others, India's prospects, economic prospects, are still quite bright. And there is potentially an interest in India as an alternative destination for investment if China is becoming a more challenging environment. So people are talking about China +1. I mean, will India rise to that particular promise? That remains to be seen. But this is certainly an opportunity for Indian business, Indian industry, to really put across the image of India as a very attractive business prospect.
So, what is the message that India wants to get across at Davos?
India's strategy at Davos 2022 is very clear: to present itself as a stable, dynamic, growing emerging market at a time when Europe and US are troubled by the war in Ukraine. At the same time, issues of uncertainty in the markets as well as rising specter of inflation is worrying global investors. India has made sure that the state governments and the central government are aligned on the positioning to ensure that brand India is forcefully presented to everybody at Davos.
So, India as a delegation is showcasing several dimensions of its economy, the growth and success of legacy companies, the continuous profits that global companies which have been manufacturing in India, how they have been growing. So example is GSC, which has started manufacturing in India a few years ago, and it's its operations out of India are very profitable. At the same time, the third dimension is the unicorns and the rise of the startup and the entrepreneurship ecosystem. All of these three point to the fact that India is a good place to put your money in. If you're not in a rush, if you have patient capital, then India can give you a lot of benefits and profits.
As reported by Business Standard, India has adopted a strategy at Davos that is different from previous years. The delegation, led by Commerce and Industry Minister Piyush Goyal, is focused on improving internal coordination. Before the start of the conference, Goyal had invited all delegates to share their views on India's positioning. The feedback from the meeting was then incorporated into India's stance and strategy. A microsite dedicated to India was also created as a resource center. Goyal's team at the Ministry of Commerce and Industry, the Invest India officers, and members of the Confederation of Indian Industry are coordinating with state governments to craft a common response on several crucial issues. Goyal's ministry is sharing briefing notes with all delegates on issues like India's stand on the Ukraine conflict, wheat exports, and the government's flagship production-linked incentive schemes. To ensure least possible confusion about trade and investment numbers, the latest figures have also been made available. Meanwhile, foreign investors are reportedly fleeing China. As a recent report by The Economist says, Chinese President Xi Jinping's policies are having a profound and painful impact on the markets. On the other hand, while India's growth forecast for FY23 has been slashed in recent days, it has retained its status as an economic bright spot. So, could something possibly go wrong? Well, there's a challenge that the Indian delegation at Davos could face while pursuing global investors. It's the perception, both at home and abroad, that communal tensions are now once again reaching a fever pitch in India. Reports from the past few months of frequent communal clashes across India could also dampen investor enthusiasm. All of this goes back to one of India's central claims, that we are a politically stable investment destination.
Is the India story, a relatively positive story, going to be undermined by the reports coming of communal disharmony, of sectarian clashes? Of course, this will have an impact. It may create an impression that the so-called stability of India, political stability of India, a kind of a coherence that is so important for business, that coherence may be in doubt somewhat. So it is very important, I think, for the government to be able to put across the message that it remains committed to the Constitution of India, it remains committed to secularism, and that it will make every effort possible to ensure both social as well as political stability. That will certainly be important.
As a recent Business Standard editorial explains, when the government is seeking foreign investments to attain higher economic growth, a frenzied national discourse on some medieval issues is unlikely to enhance India's attractiveness as an investment destination. There will be those who would disagree with this prescription, but global investors who are already facing turmoil on many fronts might prove to be more risk-averse than before.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Back home, spiraling inflation has forced the government to slash the central excise duties on petrol and diesel. This succor to the common man will come at a cost of 1 trillion rupees for the government in the next 1 year. But what about the CNG vehicle users? The prices of CNG have soared about 60% in the last 1 year in Delhi. The price differential between petrol, diesel, and CNG has narrowed like never before. So, why is CNG on fire? And can CNG vehicle owners, including auto rickshaw and cab owners, expect relief?
Responding to a petition and also to the worsening air pollution in Delhi, the Supreme Court had in 1998 directed that all the buses, taxis, and auto rickshaws will have to switch to compressed natural gas or CNG. The Apex Court had also ordered the setting up of 70 CNG stations to meet with the increased demand. After initial hiccups, which included a waiting time of over 10 hours at CNG stations, the national capital finally took the leap of faith, and by 2021, it claimed to have the cleanest public transportation system. Apart from the reduced pollution, another big reason for vehicle owners for switching to CNG was the huge difference in operating cost of the vehicle. But over the years, the gap has narrowed down substantially. On Saturday, the central government slashed central excise duty on petrol by 8 rupees per litre and on diesel by 6 rupees a litre, providing much needed relief to households that have been hit by 8-year high inflation. The same day, Indraprastha Gas, which retails CNG in the national capital and adjoining cities, hiked the fuel's price by 2 rupees per kg to 75.61 rupees. This was the 13th increase since March 7. In all, the CNG price has risen by 19.6 rupees per kg or 35% during this period. And in the last 1 year, prices have increased by 32.21 rupees per kg or 60% according to data compiled by news agency PTI. Indraprastha Gas Managing Director Sanjay Kumar said the prices are likely to remain elevated in the near future due to high international prices of natural gas. Similarly, Mahanagar Gas, which supplies CNG to Mumbai and its suburbs, increased the MRP of CNG by 4 rupees per kg on April 30th to 76 rupees. While hiking retail prices, Mahanagar Gas cited historically high cost of regasified LNG, which is being blended with domestic gas to offset the shortfall in the availability of domestic gas for CNG and PNG segments. The company also cited the rise in prices of locally produced gas. The center had raised the price of locally produced gas from old fields for April to September to a record high of $6.1 per million metric British thermal units, an increase of 110% from $2.9 per MMBTU. But Mahanagar Gas said that the revised prices still offered savings of about 57% and 27% as compared to petrol and diesel respectively at the current price levels in Mumbai. The Maharashtra government had on April 1st reduced the value added tax on CNG from 13.5% to 3%, providing relief of 6 rupees per kg, but the relief was short-lived. Following the recent fuel price relief, the Society of Indian Automobile Manufacturers said the auto industry is keenly looking forward to similar support on CNG prices in order to help the common man facilitate public transport and enable a cleaner environment. For instance, Delhi's public transport, including cabs, autos, taxis and buses, is majorly CNG driven. Around 1 lakh auto rickshaws and a similar number of taxis are currently plying in Delhi, which levies no VAT on CNG. Various auto rickshaw, cab and taxi unions have been demanding a hike in fares and slashing of CNG prices to offset the impact of rising fuel prices.
The first point to be noted is that that of late the domestic gas prices has more than doubled in the first half of fiscal, and with the international price of gas going really high amid the Ukraine tension and other factors, I think this is reflective in the H1 pricing, and which is expected to increase further in the second half. So as per the analysis, it could reach around $8.5 per MMBTU. So I think there are two more components. One is the excise, which sits at 14% on the basic gas price, and then you have the respective state VATs also. So in case the government it is very keen in promoting at a clean fuel, I think it can be seen that where you reduce your excise component, 14% component on CNG, I think that will be a relief. Along with the necessary state government can also cut on the necessary VAT. The industry has been very, very vocal about that natural gas should be brought under the ambit of GST. While CNG of late has been growing very good, it has been a fuel which has not only be a preferred fuel in the metros, but also in the B and C categories, B and C tier cities also. Let us say case of IGL. IGL per se will only have a marketing margin that it will have, which would be not a very huge component. A marketing margin will also cover their entire operational cost of delivering the gas, the safety norms, and all other necessary infrastructure that is required to deliver the fuel. If you put a pressure more on the distribution companies like IGL or MGL or the new ones who have been awarded under 9th and 10th round, they have been spending a huge capex in terms of spreading their networks, and any cut in their marketing margins or in their operation cost would definitely hit their overall margins both at the top line and the bottom line also. Another factor which government can look forward going terms, that which anyways it passes on for some power customers, is that the more of LNG, that's the liquefied natural gas which sits in the kitty going forward. In case the custom duties also reduced to certain percent, I think these small tits and bits will give a relief to the end consumer in terms of the end pricing, reduction in the end pricing.
And why should consumers expect a breather on the CNG front?
While government has been very forthcoming in reducing the prices for the excise in both petrol and diesel, I think CNG is a fuel which is a common span fuel. It has been widely used now, as I said, not only in metro city but other cities also. And any positive direction by the government will be definitely encouraging the use of CNG as a clean fuel.
PTA reported in April that the oil ministry has stopped making fresh allocation of natural gas from domestic fields to the city gas sector, leading to a hike in CNG and piped cooking gas prices to record levels. Despite a decision of the cabinet to give 100% gas supply under no-cut priority to the city gas distribution sector, current supplies are at March 2021 demand level. While the demand has grown at a rapid pace in cities with CNG networks, the lack of fresh allocation from domestic fields meant that operators bought imported liquefied natural gas at prices that were at least 6 times the domestic rate. Among the ways in which the government can help CNG users include cutting the excise on the fuel and reducing customs duties on LNG. States on their part can consider a reduction in VAT as natural gas prices are expected to stay elevated. Such relief would not only benefit CNG vehicle owners, including taxi and auto rickshaw operators, but it would also signal the government's positive attitude towards cleaner fuels.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Apart from cutting central excise duties on fuel prices, the government also levied duties on steel exports to curb inflation. But it has come as a setback for the metal and oil marketing space, with experts turning cautious on the sectors. In our next report, we delve into the likely impact of these policy decisions and the outlook for the sectors. The introduction of a 15% export duty on most steel products, up from zero, and an increase in levies on iron ore and pallets to 45 to 50% propelled a sharp slump in metal stocks on Monday. Shares of Tata Steel, JSW Steel, Jindal Steel, SAIL and NMDC cracked up to 20% in intraday trade. Analysts have now turned pessimistic, particularly on metal companies, as the recent policy moves are set to undermine their operational performance from here on.
So this is negative because export, if you put a 50% duty, there will be much lesser realization from exports, and a lot of steel companies are doing exports between 10 to 25% of their production. So you see today they already had a problem with high coking coal prices. So margins are shrinking, and in that, this lower realization will shrink them further. So it is negative, and stock prices are discounting that. A lot of, it will be downgraded, but then stock prices have also gone down. So we need to do some reworking, and then post that we might have to see how much, if there is any upside left or something.
Some brokerages have already initiated rating downgrades on leading steel stocks, as the hike in export duties is expected to lead to a sharp correction in domestic steel prices. CLSA, for instance, has reduced domestic steel price estimates by 8 to 10%. On the back of lower steel prices, the brokerage has cut the EBITDA estimate for steel companies by up to 24%. It sees no near-term upside catalyst for the sector other than a stimulus in China. ICICI Securities, meanwhile, has highlighted the policy decision as extremely negative for the steel sector, expecting a broad-based multiple D rating for the industry. It has also lowered the ratings for most metal stocks. The brokerage has broadly assessed a likely 5,000 to 7,000 rupees per ton of impact on EBITDA for integrated steel players, while for unintegrated steel equities like JSW Steel, the impact can be 5,000 rupees per ton. Besides, according to Motilal Oswal, the export duty hikes can impact the valuation of the sector and companies' ability to invest in capacity growth in the long term. On the contrary, the government has reduced excise duties on petrol and diesel by 8 rupees and 6 rupees per litre respectively. Following this, Prabhudas Leeladhar has cut its FY23 EPS estimates for HPCL and BPCL by 56% and 40% respectively, as elevated oil prices remain challenging. According to the brokerage, OMC's ability to reduce high marketing losses will be contingent on crude price correction, as high inflationary pressure will prevent meaningful retail price hikes despite excise duty cuts. Technical charts suggest shares of BPCL could see a bounce until their new 52-week low remains unbreached. The weekly chart of Hindustan Petroleum Corporation, meanwhile, currently signals a bearish trend. The stock price of Indian Oil Corporation is well placed given its sustenance above the 200-day moving average level. On Tuesday, logistics player Delivery's market debut will be closely watched, while in the primary market, chemical company Aether Industries' 808 crore rupees IPO will open for subscription. Besides, Adani Ports, Balkrishna Industries, Balrampur Chini, Grasim, IPCA Laboratories and Metropolis Health will be on investors' watch ahead of their Q4 results. That apart, stock-specific action and global cues will dictate the market trend.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the Lal Street, let's turn our gaze to the skies. Last month, when a 17-seater aircraft lifted off a short runway of Assam's Dibrugarh, it not just charged into the clear hill sky, but also into the Indian aviation history. The indigenously built Dornier 228 aircraft was for the first time used to carry passengers. Our next report offers a peek into the aircraft built by Hindustan Aeronautics Limited and how it may help India meet the regional connectivity target.
The deafening noise of a Dornier 228 aircraft completely drowned the sound of clapping at Assam's Dibrugarh airport on 12th of April. But it didn't stop those at the airstrip from cheering. On board the 17-seater aircraft were Aviation Minister Jyotiraditya Scindia and Union Law Minister Kiren Rijiju, who were flying into history. Built by Hindustan Aeronautics Limited or HAL, the lightweight aircraft was so far used to transport troops, carry out maritime surveillance and several other government missions. But on April 12th, it took off on its first commercial flight between Assam's Dibrugarh and Pasighat in Arunachal Pradesh. From 1985 to the early 1990s, a regional airline called Vayudut used Dorniers to service 100-odd airports across India. the Dornier 228 made up close to half of Vayudut's fleet of 21 aircraft. Back then, however, it was a German-made aircraft. Unfortunately, there were multiple reports of engine failure during flight. In fact, in 1989, a flight from Pune to Hyderabad crashed and killed all 11 on board. Vayudut wound up in 1997. However, the HAL-built plane is based on a new generation of Dornier 228 aircraft. Until recently, the Dornier 228 aircraft were being manufactured under license from RUAG, a Swiss company. While HAL would supply the fuselage, wings and tail unit, the aircraft itself would be assembled at RUAG's German facility. So, what about the DO-228s that have been on commercial jaunts in Arunachal Pradesh and Assam for Alliance Air? These aircraft have been made in India from the raw material stage itself. The aircraft will now help the government meet its target of providing air connectivity to Tier 2 and Tier 3 cities of the country under its UDAN scheme. UDAN's aim is to make air travel both affordable and widespread. One of the ways it does this is by connecting unserved airports and airstrips across the country. Recently, HAL Chairman and Managing Director R. Madhavan told Business Standard that there were over 150 airports and airstrips that were only suitable for less than 20-seater aircraft, which is the class the Dornier 228s fall in. Therefore, airline operators can fly Dornier 228s on routes connecting such airports and airstrips. According to Madhavan, the Northeast, with its challenging hilly terrain and the difficulty of travelling there by rail or road, was the obvious area to begin with. It is a modest start. However, Madhavan is confident that the use of the two civil Dornier 228s by Alliance Air will bring in other operators who would also be prospective HAL customers into the regional aviation market.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
After the sale of Air India, Alliance Air is the only government-run airline in India. It is now planning to connect 5 towns of Arunachal Pradesh with Assam's Dibrugarh. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.